in this group. So for those of you that are new and in this group, to kind of follow along as to how we think and what we're doing, when we go to the left-hand chart on the 1 minute chart, you'll see that Steve has drawn in the black lines from, and we're identifying bottoms. And so these bottoms, as they show the angles on those black lines, are indicating bullish divergence. So now, once we have bullish divergence identified as a leading indicator, it's giving us a heads up. Hey guys, this thing is looking like it's going to go up. So what we do next is, now we're paying attention to, what I do next is I'm paying attention to the blue and the orange lines below the histogram. And as the histogram goes from dark red to pink, and right there, yeah. So we know that it's changing its direction. And then once we see the blue line cross over the orange line, that's saying, hey guys, this is about to go. Nice deep green bars on the histogram. And then the next thing is the PSAR flip. So the PSAR is that little dot right there. And that says, hey, it's getting ready to go. Another thing that I went through the classes is that when you see the price action, meaning that yellow line just above it, starts to collide with the PSAR above. So there's a little PSAR just up above that candle right there. And when that price action starts to collide, it's saying it's moving against it. Now I'm focusing on the black Bollinger Band here. And of course, the golden rule is that when the price breaks above that black Bollinger Band, or the black center line, that's when I'm looking for my entry. And of course, here comes the PSAR, second PSAR below, which gives you, more confirmation. Now you get the arrow that says, okay, ready to go. So as you get better and better at this, you're looking at the entry once it breaks above that black center line. Now we're in the trade and we're going home. Have I done the right thing? So then we're looking at clock angles. And the clock angles are starting to point up. The edge of the Bollinger Band is starting to move up as well, giving you confirmation that this is moving in the right direction. And that's it. Exit strategies are super, super important here. So now we're going, what do we do? What do we do? And typically, my first thing that I think of is follow the yellow brick road, meaning that yellow line, we're following it. And then, of course, James goes into candle bodies that break that and so on and so forth for exits. But generally, that is what I would have looked at in that trade. That would have been my thought process. So hopefully that helps you.
Amazing. Thank you, Phil. Wow.
Sure.
Well explained. I appreciate that so much.
Very welcome. Hope that helps.
Yeah. Yeah, I love how that, it all starts with this divergence. And like you said, nobody's taking any trades because of this. It's just that when we see this beforehand, now the arrow, all the other confirmations actually mean something. And, like you get an arrow here, right? Obviously, that didn't mean anything. There's no divergence before. So that's huge. But when you see this is when you suddenly become interested. I love that. And then we saw the same thing on the 3 minute as well. This is a 3 minute time frame. This is a 1 minute. And we're seeing that same divergence, 8:03 a.m. to 8:36. So it'll be within a few minutes, pretty close. See, 7:57 to 8:35 here. So pretty close. You're seeing the same divergence on the 3 minute. So again, when you've got divergence on both time frames, it's showing up. Then you've should have a pretty decent move in coming.
Steve, do you want to do a pip count from that last 1 minute on the left?
Yeah, let's do it. Okay, so a newer trader would enter here with the arrow. Most of us entered right here. Or pretty close, maybe halfway up the candle after it crossed, because you do want to make sure it's not just wicking over. So let's just measure halfway up this candle here. And then let's measure to the point where a newer trader would have exited on the yellow brick road, which is this red cross below the yellow, 42 pips. Now, many of us would have waited to see if we were going to get a bullish engulfing, which is exactly what we got. And we would actually probably still be in the trade, which right now is 67. It's currently at around 67 pips.
When you factor in that particular pip count in that trade, when you factor in what that actually means to you as a trader, and as you start to follow the rules and start to follow the Gates program, 67 pips there. How many pips are you looking for in your first gate?
I believe it's 33, is it not?
Mm-hmm. So there's lots of room there to succeed, and just follow the rules. They're not always laid out perfectly, but when they do lay out like that, you want to be ready.
Yeah, and as a new trader, when you know what a really good move looks like, it gives you the confidence to go ahead and just wait some of the other stuff out, and maybe even miss a good move or two in a given trading day, and just wait and be patient for one of these, and where you've got the divergence. The divergence has been happening for a while, and then you see everything line up. Because what if this market actually, with the divergence, continued to go down? That's fine, because you're not in it. You're waiting for your confirmations to happen, right? What if all this happened? What if all this hadn't actually even happened yet? What if we were still going down? We're fine. We're waiting. We're like the, kind of the predator that is on the African savannah and is crouched down in the grass, waiting for just the right moment to jump out. And that's kind of how we look at these markets. And that was our, as we call it, our pigeon right here. Or for a newer trader, this could be your pigeon right here. And interesting to see how the red candle happens. This little red candle happens right on the pink, right in between the pink and purple EMA. It's just so predictable. These EMAs are so powerful. I just love it.